And now, distinguished guests, we are wrapping the morning session with a keynote. The one and only Christina Frankopan from Lazard Financial Advisory is delivering a keynote on the convergence of Web 2 and Web 3. Please welcome Mr. Christina. And please note that in Kakune, Lithuania country presentation starts now for those who are interested. Welcome again, the stage is yours.
Great, thank you so much. Am I live? Hear me?
Yes, maybe you can try a little bit more. We can't hear you now.
You can hear me now? Great.
Yes, now it's okay.
Thank you so much. Thank you for the warm welcome. I'm absolutely delighted to be here. It's not my first time in Istanbul, but always a pleasure. So I'm going to talk about where we are in the transition from Web 2 to Web 3. Just very briefly, I'm with Lazard Financial Advisory. So I see quite a lot of what large financial institutions are doing in this space and asset allocators. I've also been involved in Web 3 for nearly 10 years, so I also see quite a lot of what innovators are doing. So I think this leads on from the panel that we just had. Web 3, we sometimes think, came down from the sky like magic and appeared among us, and we have to interpret it. But actually, there is real context. There is real context to what Web 3 is that is really partly a function of what's been going on anyway in financial services. I know we think that financial service delivery has been slowed in terms of innovation, but actually in the last couple of decades there's been huge change. For example, the shift from active to passive management. Now passive management exceeds active at around $13 trillion. We've seen partly regulatory-led changes in terms of PSD2 and other innovations leading to embedded finance, open banking, and so on. And I think we really need to think about Web 3 and financial service delivery for Web 3 in the context of these bigger changes in financial services. And secondly, there have been changes, huge changes in terms of computing and cryptography that have evolved very rapidly and increasingly rapidly in the most recent years. It may surprise some of you to realize that the original vision of the internet included the possibility to transfer value, and yet cryptography and the marriage with incentive design was not yet advanced enough to be able to do that. But those protocols took decades to evolve, so it should be no surprise that this new decentralized era, it might take some time to take hold. Wherever one sits in terms of the thinking about the FAT protocol thesis, just a reminder for those of you who will remember that the original vision of being able to read, consume newspapers and so on online was kind of the first stage of the internet. And then secondly, Web 2, in terms of the FAT protocol thesis, where value was accrued at the app layer in terms of leveraging data layers, and the protocol sat underneath on an open source permissionless network. Web 3 allows us to read, write, and own, and one can caricature this as the ownership economy based on a peer-to-peer network, right? Now, what does this enable us to do? Well, the two key areas that it really transforms is, one, how we think about money. This is the money flow you'll all be very well familiar with. And money itself has become a spectrum in this sense. We have commodity money like Bitcoin or gold-backed tokens, but essentially it's a form of tokenization of money. The real interest in the moment from banks is, of course, on tokenizing bank deposits. But equally, we have CBDCs on the horizon. We have around 130 countries now, representing 98% of global GDP, who are actively exploring CBDCs, both wholesale and retail. The second thing that Web 3 allows us to do is to tokenize more broadly with a number of advantages. We have already experienced great innovation in DeFi, 24/7 permissionless networks. As Pina was saying on the previous channel, a lot of the innovation has been happening in those spaces and are now starting to be heard and listened to by financial institutions and looking to recreate that within the traditional market rails. And that's not a small thing, right? DeFi, total value locked, last time I checked, was about $85 billion. We have more than $150 billion in tokenized stable coins operating on public chains. And in terms of how traditional financial institutions are looking at, obviously we have the Bitcoin ETF and perhaps the Ethereum ETF coming up. Hong Kong has just authorized both recently. And we have tokenized money market funds emerging, small, $1 billion at the moment, but definitely an emergent area. So tokenization of real-world assets is, many of you will have seen this chart before, is potentially a massive market opportunity up to $16 trillion in just a few years' time. Now, my thesis is actually this is not going to be a linear process, and what we will likely see is a transition which is a little bit more like a big bang. And that is really quite, frankly, a function of coordination problem in terms of coordinating how DeFi and TradFi rails and other areas of financial market infrastructure are going to live side by side going forwards. Nonetheless, an absolutely massive market opportunity, right? 97% of institutional investors believe that tokenization will revolutionize asset management. And so pretty much every financial institution you talk to right now will be going beyond proof of concepts and actually actively thinking about what their strategy is in terms of digital assets. Right, what does this mean in terms of financial market infrastructure? This is from a BIS paper, and which, by the way, they have produced a new paper just this month, which I highly recommend you look up. It's called the Finternet. If we think about how the Finternet and how Web3 might sit as an underlying set of technologies in the future financial market infrastructure, it obviously allows a huge amount of disintermediation in the capital markets infrastructure supply chain. Now, again, I think this is going to take some time to evolve, but everybody is thinking about and looking about this. We still have, for example, in terms of transfer agencies, something like in a recent survey, 70% of transfer agents are still using faxes. So the efficiency benefits from disintermediation in this space are enormous. I would say that we're really at what one can call a Kodak moment. I'm definitely seeing a distinction in terms of financial institutions who are taking this direction of travel seriously and those who are not. And some will be left behind. Many of you will be familiar with the website that counts how many times Bitcoin has been counted as dead. But you may be less familiar with academic articles going back many decades entitled, "Are Banks Dead?" or "Are Recent Reports Greatly Exaggerated?" Banks are not going to be dead. Traditional financial institutions are going to have a role, and that is partly because of the very special role they have in the money creation process. So, what comes after Web3? We are partly along the journey towards Web3. As I said, I think that there will be a sudden acceleration once those coordination issues in terms of capital market infrastructure resolved, and how interoperability between traditional rails and DeFi rails will cohabit. And in particular, there are regulatory interoperability, scalability issues with Web3 coming to term. But there's more coming down the pipe that is happening extremely fast, which I'm going to call Web3+. Other people call it Web 4, the symbiotic web. Others call it Web 5, as in 2 plus 3, which, if you know your Fibonacci numbers, means that Web 8 comes after that. Web 3+ really is the marriage of Web 3 with AI and the ability to autonomously execute, for example, complex financial transactions. I'm caricaturing this as the agent economy. So the technology really is already here. You can say, with a voice message, put aside $100 into a savings account for my daughter, and when it rains, add $1, automatically escrow that, looking up to an oracle to capture the weather, and that will be transacted and rebalanced autonomously. And that technology exists today, but is definitely what's coming down the pipe. It will not be a surprise to you how much is going on in the AI space at the moment. And the pace of change is accelerating. It took ChatGPT 5 days to reach 1 million users, and less than 2 months to reach 100 million users. And I can say from what I see with financial institutions' engagement with advanced technologies is that AI in many ways is at the forefront of their thinking in terms of how they execute and deliver financial services, with Web3 in a way shoring up behind it. So the Finternet is on the horizon. So this is where we're going. We're going towards decentralized AI networks, AI-powered smart contracts, personalization, which again, I remind you, feeds into a lot of the trends that we're already seeing in financial services. Democratization of access to financial services, the drive to passive investments, ETFs, low-cost assets, and composability of portfolios is already existent and will be augmented by AI. The final point I'd like to say is that for me, the really key aspect that we have yet to resolve in terms of how we go from Web 2 to Web 3, and more excitingly to Web 3+, is thinking about privacy and digital identity. This goes really to the heart of how the networks are going to be operating, whether autonomously or human-led. And I think is partly, societal, social, political, and indeed geopolitical issue. But it goes to the root of the cryptography that's behind Web3 in the first place. And I think an enormous amount of advancement is happening in terms of zero-knowledge proofs, MPC, homomorphic encryption, that are allowing us in the future to deliver the kinds of human-centric financial services, but privacy enhanced. So the debate between public and private blockchains in a way becomes extremely blurred when you can have privacy-protected smart contracts and so on. While equally, the ability to have, for example, a KYC credential that travels with you through your financial service journey, so that savings pot for my daughter or whatever may be pre-qualified through a KYC process that may travel with her through her signing in her wallet. So this is where I see the world going, and my belief is that we are maybe 5-10 years away from that, and the problem to get there is one of coordination, not whether or not it's going to happen anymore. I would not have said that 5 years ago, having been in this space a long time, but I think, as I say, the Kodak moment is here. There is absolutely no way that these Web3 networks are not going to exist alongside traditional financial rails. It's a question of how the coordination mechanisms are going to operate between the two, in my view. Excuse me. So that's all I have for you today. Please feel free to look me up on LinkedIn or come to find me after this talk. I'd be delighted to give you a bit more detail. 15 minutes is not long to talk about the future of financial services and the internet, or the Finternet, as we're now calling it. But it's been a great pleasure to be with you, and thank you for your hospitality.
Christina, for your kind contributions. Thank you so much.